Let's get started. I don't see anybody out in the hallways trying to get in. I'd like to thank you all for coming, and I'm hoping this will be informational for you. My name is Steve Eldridge. I'm the town manager. I recognize some of you, and I haven't seen some of you. And Pat Dow is our assessor. This is an opportunity, hopefully, for you to get some questions answered. And we'll give it a chance. We'll go through and talk a little bit about personal property and the whole process of how it works. First, just so everybody is aware, and I'm sure I'm not telling you anything you probably don't already know, but state statute requires that every year the assessors send out a notice, and it's not just for personal property, but it also is for real estate. Now, historically, for the time that I've been here, I haven't seen that happen on a regular basis. So for some of you, it might be something, if you've lived here all your lives and you've never seen a notice, it is something that is supposed to be done every single year. It is a state requirement. Now, whether you return those forms or whatever you put on them or you throw them away, I don't think we're not going to go chasing you for that, but just to let you know that it is a state law, and part of the driving force besides that is why we're doing this. The purpose behind this is, one, it's required by state statute, and second, why we're asking for a listing is because we have new software, and we need to enter data, and the record keeping here has really not been the best. So what we're trying to do is get things into the computer so we have a database that's accurate. And that is really the driving force behind most of what we're doing, besides it just being state statute. So that is, I hope that answers why we're doing this. I don't know if that was clear to everybody.
As far as I'm concerned, that state statute is a statute, but it doesn't have to be enforced.
It was optional. I called the state. It was optional
It's optional
to the town.
for the town to do it.
Okay,
Well, you've got to remember that.
I do remember that, but let me tell you what's going on. Okay, you have companies like Dingley Press and ETTI and Enterprise Electric and a lot of other people in town who pay their personal property tax. And the tax process is supposed to be fair and equitable for everybody, not just the bigger companies. So from my perspective as your manager, and I'm sure the assessor agrees, and I'm hoping the council would agree, that why is it fair for them to pay their tax in personal property tax that they've been paying for years, and other people it's not?
That's not what I'm not worried about.
Oh, I know that.
It's what I'm saying is, when people say it's a state statute and it's got to be enforced, it doesn't have to be enforced. The people ought to know that it doesn't have to be enforced.
May I make...
Yeah.
No, they're not going to throw the town council or the town manager in jail for not doing it.
Right.
What they are going to do is penalize you severely for not doing it on your revenue sharing and your school funding. For instance, there are 80 towns in Maine that do not do personal property that I know of. It changes from year to year. What the state does is they say, okay, a town that size should have $30 million worth of personal property. They add it to your tax value and then use that number to calculate your school funding and your revenue sharing. You not only lose on your school funding and revenue sharing, but you're not collecting that money either. Now, the people who get penalized the most for not doing that are the people on fixed income, the low-income people, the poor people, because it makes your taxes on your homes go up.
That's very good. I understand that, the whole 9 yards. But what I don't like is when it says it's got to be enforced. The town doesn't have to enforce it. I will pay it. I've been very lucky over the years. That's not a problem. But I just don't like to have the town saying to the people, we have to do this. It's a state law. It's a state statute. It does not have to be enforced. That's all I want to say.
Okay, and that's fine. I don't disagree with that. But what's been going on is that some people are doing it and some people aren't. how do I tell the people who are paying their personal property
So you're
tax?
trying to make it fair, that is commendable, trying to make it fair.
And that's the whole point behind, not just what we're doing with personal property tax, but it's the whole point behind if we ever get to the point where we can do a revow, is to make it fair and equitable. Things change over a long number of years, and we miss things, or values change, and it's fair and equitable to make sure that taxes are distributed according to value. And that's all we're doing. We're just trying to make it fair for everybody, trying to fill a database on a computer software that cuts a lot of work out for us, and especially for Pat once it's all in the system, because it does all the depreciation, it does everything, it has all the bells and whistles, which is nice. Question?
Explain to me, since I'm a little bit lost on this, what exactly includes all of personal property?
I'll get to that in a minute.
Oh, okay, because
I'd like to get other people.
that's no problem, I'm just trying to get on the same
Way down here has
page.
a question.
I understand.
You compared, like, half of us with Dingley Press. Look at the income that they're bringing in compared to the income that a garage or a farm or something like that's bringing in, you know?
The state makes no differentiation between the businesses. How much
You're
money
not,
they-
you're not even looking at the income that,
That would be totally illegal. You cannot look at income and say, well, I can tax that person, but I can't tax that. You can't do that. That's illegal.
Michelle?
Could you maybe just explain to people the difference of where we're at now at the 56% versus where we should be at the 70%, so maybe they might understand that as a homeowner, you may benefit versus if you don't have it done, where we wouldn't, and maybe that would help people understand.
You want to explain?
Yeah, let me take a crack at it. First of all, the 56%, 70% is something that is not going to have any bearing on any of this, okay? What has bearing is that there are 300 plus businesses in this town, and only 110 of them being assessed, okay? There are, last year we had over $41 million worth of personal property in the town, with less than a third of the businesses on the rolls. Okay. But they were the big ones, Dingley Press, the mill, and so on. Let's say by adding all the various small businesses in town, and some of the big ones that aren't on the rolls, let's say we increase the value of the town by $2 million, which is a very small amount. That $2 million at, if use the current tax rate of $25.50, that's $50,000 coming into the coffers of the town. Now, for a lot of businesses, that is the only tax they pay to the town. A company like Food City, Dunkin' Donuts, McDonald's, and so on, they generally lease their property, so if they don't pay personal property tax on their equipment, they pay nothing to a town at all. Sales tax and income tax goes to Augusta. What we have is a chance to, if, for instance, let's say we went up $2 million, if that added $50,000 to the coffers, that might keep the property tax on your home from going up. We can't tell until we get everything done. That's the problem. There's no way to estimate or guesstimate how much money is going to change, how much value is going to change.